reversing what could potentially have spiraled into some dramatic negative momentum last week.
Evening, Bronwyn. Yeah, and the point you made there is quite good. I mean, markets kind of gather momentum and fear feeds on fear and the like. And, you know, when you start seeing what we saw last week and to a lesser degree the week before, you kind of wonder where this bottom is going to be. I mean, we weren't looking for sort of going back to early 2009, but you start to question how much it can hold up. Nice little bit of a rally. Volume kind of average today, up just over 1%. I think what a lot of folks are saying is watch that dollar euro. That's really going to tell us what the view is on Greece to a large degree, lesser degree Portugal, Ireland and Spain, and if we start seeing it moving sort of towards the 140 rather than the 130 level, then we really bottom in, and markets are particularly likely to move higher.
Well, potentially, which way do you think it's going to swing? Having just spoken to John Cairns around Merchant Bank, he says on a purchasing power parity basis, 120, 125 on the euro dollar is close to fair value. I was under the impression that it was around about 130, but that means it's still got a long way to go.
Yeah, I also would have thought 130, but be that as it may, I mean, there's always the fundamentals and they will rule over the longer term. In the shorter term, fundamentals are one thing, but it really is market sentiment, and particularly currency. Currency is one of the more efficient ways in a sense where markets or individuals and institutions in the market vote on currencies, on companies and countries and the like. And that's really what they're doing on the EU at the moment, very much voting on the EU and saying, well, this is a little bit spooky. The 130 might be the purchasing power parity number, but I would look forward. I think 140, 145 is more likely to be the place we're moving to over the months ahead, not in the short term.
I'm not going to speak to you about Anglo Platinum and Harmony. We've covered that with Peter Major. But looking at the downside on the top 40 today, Old Mutual is at 11 Rand 64, down 2%. Now, if you're one of those who subscribe to the fact that a target price on Old Mutual is around about 18 Rand, couldn't this be a buying opportunity, or are you one of those who are staying away from Old Mutual?
No, look, I'm not staying away from Old Mutual. I mean, you know, the brilliant buying was in the 4 rands, but that's obviously massive hindsight. At these points here, I mean, you would stay away because you're worried about some of the risks, and they're out there. And the issues are, I mean, Scandia's got to be integrated. Those always take longer and cost more. They've got emerging market exposure and overweight in that. That's fine as a South African. I think we're comfortable with that. I think the issue is America, but I think that really has been put out there, lockdown and the like. So at these prices, if you've got time on your side, I'm talking 6 plus 12 months, Old Mutual is a good proposition.
And Naspers, one of the best performing stocks of 2009, rallied around about 80% if my memory serves me correct. 259 Rand today, down 2 1/3%. Would you be picking up Naspers into any negative momentum?
Absolutely. I mean, you know, at 300 Rand, I thought Naspers was a touch expensive, but worth a buy. I think it's very difficult for people to not be scared of higher prices, and I think often we need not to be. Naspers, nice pullback. There might be a little more downside, 250, maybe even into the 240s. But when you look at those assets they've got, and I'm not looking at the local ones, I'm talking emerging markets in China, in Eastern Europe, in South America, in Russia, really, really quality assets, internet-based assets, and I think there's good upside there. And I think it's a stock, if you take the theory that emerging markets is where to be over the years going forward, particularly the East, particularly China, Naspers is a good bet there.